Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Scott Kirshner and Chaz Price. 419-794-3030 is the phone number. The website, arhq.com. The people at Schroders, an investment manager, surveyed 2,000 people of all ages about their retirement savings and found that, not really a surprise, many of them are afraid of the stock market. They had up to a third of their savings in cash. Is this common when you meet new clients, and are there better options for that money that are, agreeable for a nervous investor?
Boy, Chaz, this is your lane.
Yeah.
But when I talk to a lot of the clients that I talk to about Medicare or health benefits, a lot of them are saying that very thing to me. Mm-hmm. They're like, man, we just want to sit on the sideline. We've got a lot of money in cash. What do you see? Do you see a lot of people with money in cash right now?
I think that, we do tend to have clients holding a little bit more money in their cash right now, particularly millennials. I kind of remember myself, a younger me, coming, up as an investor in, pretty much starting in 2000, 2001, which we entered that, what we call the tech wreck, when the market was down, top to bottom, 30 to 40%, and then we rally back up, and then 2008, 2009 happens. Market's down 50% top to bottom. And then, we have a flash crash, 2015, 2018. Then, we have COVID. And so I think it's just generally the fact that, the millennials are entering maybe their peak earnings years. They're coming into, having some money to save finally. And, they've been hit with some pretty significant stock market declines. And so it's causing them to be a little bit more conservative in general. Based on the article that we were, referencing for the show today, it shows that about more than a third of millennials workers' retirement savings is sitting in cash, and it's kind of staggering to me because this is precisely the time when you should be invested more aggressively in taking advantage of some of these opportunities. I mean, this might be one of the best buying opportunities we have in the next 10 years, especially after having enjoyed such a long bull run. I think everybody expected that there was going to be a pullback. But the article also cited that more than 60% of millennials and 2/3 of the workforce age 45 and older are fearful of losing money in the stock market. And so I definitely do get that
Sure.
concern quite often, is that people are definitely scared. And that's really what's holding them back from earning and missing out on some of these rallies that we just talked about earlier in this week or earlier in the segment, that the market is actually doing pretty well right now.
I wonder, Chaz, because if you look at that number, 45-year-olds, if you go back 20 years ago, even not even quite that far back, but in 2008 when we had the big bubble burst, and then we had COVID a few years back. But if you look at over the past 20 years, they haven't really experienced all of what somebody, say, 60 has experienced, right? They don't have that confidence that it's going to come back. They're in the infancy of their losing money in the market because the market's all over the place, so I'm going to have that knee-jerk reaction and put money in cash. Do you think that that's what's kind of contributing to this?
Absolutely. I mean, experience, we talk about it all the time on the show. Experience matters.
Sure.
What you've gone through is going to determine what you're willing to go through in the future. And with a younger person, I think it just speaks also to the fact that in the industry in general, we tend to stereotype younger individuals and say, oh, you should be aggressive, and you should be doing a certain thing just because of your age. Same thing with maybe retirees. We assume that they're already should be more conservative by nature without actually first assessing what their financial situation is. And so when it comes to how much cash you should have, like a lot of different things, there's no one size fits all.
Sure.
It really depends on what the investors' goals are and how much really they have saved for retirement. I think it's estimated that about 27% of the workforce right now says they have less than $250,000 saved for retirement. And so most people generally need about $1 million or so, we might argue. And so the risk of not investing and not, being too fearful of the short-term movements of the market is that you're not going to have enough saved for retirement. On the other hand, if you've been able to save well and you have stocked away, maybe you're an older worker, maybe you're approaching retirement, you've stocked away a good amount of savings, maybe it doesn't make sense for you to have so much money in the market. Maybe you should be a little bit more conservative and more fearful. And so that's really where it comes into the advantage of speaking with an advisor. It's not so much us getting the exact percent right now.
Right.
And financial planning is not a one and done type of thing. It's more so, to me, is being less wrong in the future. So, we make these course corrections along the way, and maybe we do need to change the cash percentage that you have in your holdings along the way. We'll start with maybe 6 to 12 months as a general rule of thumb, and then depending on what your circumstances are and if they change at all, we might have to adjust that and course correct along the way. So that's, in my opinion, one of the advantages of working with an advisor is that, ultimately it's a moving target. How much cash, how much stock, how much bond you should have in your investments. It's going to change. We don't have to be exactly right today. We're going to course correct over time and just be hopefully less wrong in the future. And that is what's going to help our clients be successful.
And you don't necessarily, have to put all of your money in the risky part of the market, right?
Right,
I mean, you
exactly.
can be conservative with some money here. That's why we talk about diversification in the independent income system. It's those different buckets of monies that you put out there for certain situations. If you're young, you're a millennial, and you're in your investment years, and you don't want to look at the statements, and you just slap as much as you can away. That's fine. You're doing something right, but doing nothing is not going to help you at all in the long run.
Yeah, and that you make a good point there. In that, if you have any questions about what your investment allocation should be, we're doing a lot of presentations coming up in May. Just go to our website at www.arhq.com and pick something that interests you. So
Sure.
Retirement income planning is a big topic. We work with a lot of clients either in retirement or approaching retirement that have some of these very same questions that you have. How much should I have at risk? How much should be conservative? And in those presentations, you get an opportunity to really kind of kick the tires. Nothing is for sale, but kind of see if some of the methodology, particularly our independent income system, makes sense to you.
Sure.
Where we kind of take I call it almost a statement of purpose. What is the purpose for these monies? What is your why? To not to piggyback on Simon Sinek's book, start with why. And then when we start to add and use the technology that we have access to, our financial planning software, Riskalyze, Right Capital, then we start to make them goals. But that process, you can learn a little bit about that at our upcoming presentations here in May.
Right, Chaz. We've got a couple of events coming up. Obviously, out on arhq.com. Click on the events tab. Like you mentioned, exactly. We've got an educational workshop May 15th, starting at 6 o'clock at the BGSU Levis Commons, and then May 17th also at 6 o'clock, where we're going to be talking about taxes and income in retirement. So, as always, check us out on the web, and you definitely can find out if any of these prior shows you want to listen to, snippets of them, they're all posted out there.
And if you want to just have a conversation with the team at America's Retirement Headquarters, really easy, 419-794-3030. There's a fairly famous saying out there, be fearful when others are greedy and greedy when others are fearful. That's by Warren Buffett. I dare say he knows a thing or two about investing. But you can't base your whole investment strategy on one adage. It really depends on where you are in life and, what your risk tolerance is. And so that's a little more than a witty saying. That is going to take a little bit of fine-tuning. But the team at America's Retirement Headquarters, they can help you with that. Again, 419-794-3030 or arhq.com.